So this is US 30 analysis for Monday the 29th of January. Now, let's have a look what I'm priced and where prices may likely go. So early last week, as we can see here, we've had a few pullbacks here on the US 30. We've had a move upwards and formed a new high. Very strong sell-off there. Well, in the context of this overall, well, I suppose it's in the context of the time frame. We've had an immediate recovery, a small pullback again, and we've seen the very strong upside continuation here on the US 30. So the US 30 is trending upwards very strongly. I suppose it's not telling you anything. Nobody that looks at the chart can't tell, but so from where we are at present, and we'll see whether we do have the bit of a bull flag form. We've had a very strong move, so we'll see we have a bit of a bull flag form. Possibly looking for prices not to trade beneath, say, this 26,500 or 26,682. Wouldn't think we'd trade beneath that before we see that upside continuation. So we'll see a brief pullback, possibly before we head up towards this 26,862. We'll see in around 26,862 whether we do find some resistance, possibly sell side momentum, bringing us back down to 26,600. Or we do head down towards that 26,500 level before we find support and possibly a move to the upside. I can't anticipate prices moving much beneath this 26,500, but if we did, 26,391, possibly a level that we would have a look at for a possible bounce in the market. If, however, we do see that upside continuation and we do break above the 26,862, the very next level that we are looking for to the upside is up to 27,114, while bearing in mind that 27,000 may be a psychological level that we might see some sell side momentum enter the market from. To the downside, if we do break down from where we are at present, and we aren't able to hold this 26,500. We've mentioned 26,391, beyond which we're looking for 26,320. And yeah, that's pretty much the levels I'll be looking at to the upside and down. So I suppose I could just mark these levels out on the old chart. So I wouldn't anticipate prices moving beyond, say, just there. If we do have a bit of a retracement, I wouldn't anticipate prices moving beyond. Shouldn't change that color a bit. And 27,000. I'm just going to put 27,000 on the charts as well. Maybe a psychological level. Just bear with me a second here. That we might see prices turn away from. Yep, so those are pretty much the levels that I'll be looking at here on the US 30. So for a wrap up here, let's just have a look at the old higher time frame. So over to the monthly first. Get scale on here correct. As you can see here on this monthly chart, we have had a very strong run on the US 30. Just bear with me a second here. Let's just get these market drawings off the chart. Let's lock the drawings. So on this US 30, we've went into this slight range here, but ever since we broke it, we've been in a very strong trend here on the US 30. Now, this candle for this month of January is increasingly looking like an exhaustion candle. And the reason it's exhaustion candle is pretty much an engulfing candle of the same denomination as the candles which preceded it in a trend. So in this case, it is a bullish candle in a very large bullish candle, which is engulfing in a a persistent trend, and it's a bullish trend. So while it's not a counter trend signal, if it did appear at the end of a sell-off in a bullish trend, a candle of this size, possibly. I suppose it possibly is a an exhaustion candle, but we'll see how it develops. We'll see whether we do get possibly counter trend. I shouldn't say possibly so much, but we'll see whether there are counter trend opportunities off this candle. But it's shorting this market is pretty much standing in front of a steaming train, really. But ultimately, this candle is well north of 1,000 points or so, and it is a very strong bullish candle at the end of a very strong, well, I shouldn't say at the end of the trend, because we're not sure when the trend ends, but I think this candle is possibly a good indicator that we might see some retracement in February or March coming up. And let's just have a look at the weekly time frame. On the weekly time frame, we can see here, just have there we are. So on this weekly time frame, we can see that we've been in a very strong trend to the upside on the US 30. We've pulled away from the quite a bit from the moving averages, and we don't look poised at present to retrace back down towards the moving averages. Last interaction with a moving average was, wow, quite a bit away. Let's just see. Our last interaction with the 20-period moving average was in May of last year, 2017. Since then, we've had a very strong move to the upside on the US 30. And it would be difficult to justify. There are at present on these charts to suggest that this trend may end, or we might get some mean reversion at present. So ultimately, this market does look poised for further upside continuation. If we head over to the daily chart, again on the daily chart, it is a similar story to the higher time frames. We have had more interactions with the moving averages, but it has been a very strong trend to the upside, especially here on the daily chart. So yeah, that pretty much just wraps up everything in regards to the old US 30. I mean, in conclusion, this market does appear poised for further upside momentum, but on the monthly chart, we do appear to be getting putting in a bit of an exhaustion candle here in January 2018. And yeah, with that said, that pretty much just wraps up everything in regards to the US 30. Thanks for watching.